at 11 o'clock this morning. CNN's Christine Romans joins me now to break down the latest jobs report. And Christine, I mean, this is above expectations, and it shows accelerating job growth, does it not?
It feels like the beginning of the Great American Comeback, right? I mean, 916,000 in 1 month, and any normal time would be just gangbusters. But remember, these are lost jobs we are adding back. When you look at sort of the trajectory here, you can see there's still more work to be done. We're still in a jobs hole. That jobs hole is about 8.4 million jobs. So we still have a ways to go. Not everyone is on this rising tide here just yet. The jobless rate at 6%, you're right, is the lowest we've seen of the pandemic, but still well above where we were when all of this started. And when I look at the sectors, Jim, you can see exactly what's happening here. Vaccines, warmer weather, reopenings, and schools. We saw jobs added in education. We saw jobs added in leisure and hospitality, in manufacturing, in construction. Jim, that is that red hot housing market that we're seeing in those construction numbers. The government calling these widespread job gains. But again, really important to point out that these are jobs being added back in the economy, still down about 8.4 million jobs. And we still have this worrisome trend of some people who've left the labor market and might not be coming back anytime soon. We've seen that with women in particular. In these numbers, more than almost 11.5 million people say they can't go back to work because the business they worked for either closed or just doesn't have enough hours for them yet.
Claire Sebastian joins me now. Claire, let's get to the numbers. A bumper jobs report, blistering hot, I've seen it described as too. Just walk us through the details on what we saw.
Yeah, Julia, this number blew past the sort of official expectations. The consensus was around 675,000 jobs to be added. So this was way past that. I will say that there were some sort of unofficial expectations circling around of around 1 million. So this comes in line with that. But if you look at the picture for the last 3 months, rather, with these revisions, it really does show that so far this year, we have been seeing momentum building when it comes to jobs gains. January was raised up to 233,000, February to 468,000. So we see as these vaccine programs begin to accelerate in the US, that jobs gains are following. Now, I will say that the US economy is still in a hole, down 8.4 million jobs since the start of the pandemic. So of the 22,000 lost in March and April last year, there's still some way to go. We still have, 8.4 million people who had jobs back then who don't have them now. So this is showing momentum, but still a long way to go. And homing in, Julia, on some of those sectors, you mentioned this leisure and hospitality, the biggest winner, 280,000 jobs added. Of that, really interestingly, almost 2/3 came from food service and restaurants. That really shows that sort of the weather was starting to warm up, restrictions were getting loosened, vaccines were rolling out, and these jobs were coming back. That sector, though, still down about 3 million jobs since the start of the pandemic. Also, construction and manufacturing were bright spots, rebounding from some weather-related hiccups, and even despite the supply shortages we've been talking about. One more thing to mention, Julia, wage growth was something that a lot of people were watching because of worries about inflation on Wall Street. Wages actually ticked down very slightly.
Yeah, that's a worrying sign and something we'll continue to watch in particular. We can't take it away from this report. It's a fantastic report. It's great to add back 1 million or near 1 million if you include revisions, jobs that we've lost. But to your point, we're still down 8.4 million jobs since the pandemic began. I've seen some estimates. I think Pantheon Economics said we could see 1 million this month, and we've seen close to that. We could see 2 million for the next 2 months, so April and May. Claire, how quickly are those forecasters saying that we could add those remaining jobs back?
I think a lot of people are seeing a lot of momentum out there, Julia. Like, that isn't far from the sort of various consensuses on this that I've seen, that this could really sort of exponentially accelerate, particularly as the weather gets warmer. And again, it really depends on this vaccine rollout and how fast the vaccination program can get ahead of the spread of the virus. The virus is still spreading. It's still very worrying in certain states, but vaccines are being rolled out really fast. But crucial to point out that this has not been an equal crisis when it comes to unemployment. Blacks have been disproportionately affected. Black unemployment was still at 9.6% in March. So that's much higher than the average overall. Women have been forced out of the workforce. So I think we're going to be looking not only for the overall recovery, but how it impacts different parts of the economy and the reshaping that we talked about. Big box retail has been a winner, traditional retail has been a loser, delivery has gained a huge amount of jobs. So there's been a sort of retooling of the economy, and that's going to play out here as well.
Now, joining us now is David Kelly, Chief Global Strategist at JP Morgan Asset Management. David, fantastic to have you on the show. This jobs number at the top end of expectations. And I know your forecasts for the rest of the year actually are more optimistic than the Federal Reserve's. Your view on what we saw today in your forecasts?
Well, that's right. This was a blockbuster report. It was, you can add in to those 916,000 payroll jobs, you can add in an upward revision of 156,000 for the prior 2 months. So we're now about 1.1 million jobs higher than we were a month ago, according to the report. And remember, this is before the stimulus plan hit. I mean, this reflects the economy as it was in the week of March 12th. And you've still got all this fiscal stimulus coming. You've got the effects of vaccination on allowing for reopening. So I think this is the first of quite a few very strong employment reports. This is turning out to be, or will turn out to be, I think, a very fast economic recovery.
For all the forecasting, to your point, we're in a degree of wait-and-see mode because we've got the stimulus checks coming. We've got far broader stimulus for small businesses, for example. We don't know how much of this money is actually going to be spent and therefore what the impact's going to be on things like growth and inflation. So we just have to sort of give it some time.
Well, I think there are things we can analyze about this. I mean, one of the things that's very interesting about this particular stimulus plan is it's very aimed at lower and middle income households. And, sometimes the government, has a big tax cut, but a lot of richer households get it and they save the money. But what we know from consumer surveys is that when you give it to lower and middle income households, they will spend it. Now, some of it is just catching up on bills, of course, but that still gives them the wherewithal to spend more money. And I think the combination of people finally having some money in their pockets and the ability to get out and do some things that they haven't been able to do for a year. And we're not quite there yet. I mean, we still have to get past the rest of the pandemic, but I do think that the pace of vaccination is very strong. So by the summer, the economy will be a good deal stronger than it is even in this March report.
What does this mean for Federal Reserve policy? In your own forecast, you're also saying that we could see inflation topping the Fed's approximate target, we discussed this on the show yesterday, of 2% in April and remain above that for the rest of the year. Obviously, the Federal Reserve has loosened the way that they look at inflation. We had Jim Bullard from the St. Louis Fed yesterday saying we would welcome it above 2%. But what do you think it ultimately means for policy, David?
Well, ultimately, I think that the Federal Reserve has to turn tough at some stage. They don't want to do it right now. They want to try and keep long-term interest rates low to encourage a full economic recovery. That's what's called sort of forward guidance. So they say, oh, we'll be very easy forever. But I think that by the fourth quarter of this year, you're going to see some very strong economic numbers, and you're going to have to see some change of tune from the Federal Reserve. I think they do need to think about, if not raising short-term interest rates, they at least need to think about, not buying government bonds at the pace they've been buying them at. And I think you'll see a tapering of that early next year. Bottom line is I do think long-term interest rates, mortgage rates are going to go up over the course of this year as this economy recovers and as the Fed begins to get a little bit more hawkish.
When they start to communicate that perhaps the recovery is so strong that they need to adjust policy or tinker with policy to some degree, will investors be confident enough in the pace of the recovery to accept that and not be fearful of it?
Yes, I think so. I mean, you can raise interest rates in an economy with a lot of momentum, and this is an economy with sort of unique potential for momentum here. You've got the sort of unique advantage of this COVID recovery, where a lot of things that can just automatically reopen when community spread dies down and we have a sufficient percentage of the population vaccinated. And you've got a very short and sharp stimulus package here, which also will help the economy. So I think raising rates in this kind of environment probably won't harm the economy, won't slow it down in any significant way. And it is important to try to get monetary